Welcome to Navigation Trading Live. You are now part of a growing group of do-it-yourself traders who are trying to change the way investors think about building wealth. But because we don't believe in using financial advisors, stock tips, or traditional financial media, we have to do things different. We have to do things smarter. We do that through an art and a science we call trade hacking. At Navigation Trading, our methodology is based on statistics and probabilities, not hype or emotion. Our core strategies have been used by market makers, hedge funds, and floor traders for many years. Now we share these secrets with you. Whether your goal is to make an extra $1,000 per month or replace your current income, with our guidance, you can achieve financial success beyond your wildest dreams. So let's get started. What's up, Navigation Traders? Good morning. Hope everybody had a great weekend and you're ready for a great week of trading. This is Navigation Trading Live. We broadcast every Monday morning at 8:25 a.m. Central before the markets open. Make sure you connect with us on financial media so you're notified of these different broadcasts. So let's get started. Wanted to recognize last week's trivia contest winner. So it had to do with how much credit do we like to receive on an iron condor according to the navigation trading methodology. And Fran Roig, I hope I pronounced that right, was the winner. He posted that on YouTube and he chose the Trading Butterfly Spreads for Income course. So congratulations to Fran. We're going to do another trivia contest this week. So remember, the rules are the first listener to answer correctly wins, and you must post your answer in the comments section of either Facebook or YouTube. So make sure you don't email. If you email, it's not eligible. We're trying to gain engagement on Facebook and YouTube. So make sure you post your answers there. So this week's trivia question, here we go. So has to do with probability of touching. So basically, if an option has a probability of being in the money of 15, or in other words, another way to say that is it has a delta of 15, this means that there's approximately a 15% chance of the option expiring in the money. But, so here's the question. What is the probability of price touching that in the money price at some point during the option cycle? Okay, so remember the delta and the chance of expiring in the money has to do with at expiration, the probability of that option expiring at that point. But what about just touching it at some point throughout the cycle? So think about a strangle, right? We like to set those up with somewhere in the 16 to 20 delta range on the short strikes each side. So that means you've got about a 16 to 20% probability of that expiring in the money on that particular side. But what's the probability of price touching? Okay, so again, we're just looking at one side. So just one option with a delta of 15 or a probability of expiring in the money of 15%. But what is the probability of it touching that strike at some point during the option cycle? Okay, hopefully that's clear. So go ahead and post your answers on Facebook and YouTube, and the winner will receive the course of their choice at NavigationTrading.com. So good luck, everybody. So a couple announcements. I've been talking about this for a few weeks now, but we've got this new course coming. We're setting up a new platform for our courseware. And so the course is done. It just got through its final editing, and now it is getting ready to be loaded up. So I'm hoping later this week, early next week at the very latest, we'll have that course, and we'll make sure we make an announcement there. And then the Navigation Trading Strategy book, kind of wait until the new platform is set up as well. So that's coming soon. It's almost done as well. And then the new lower commission rates, I've got a call in with 2 different brokers that we're working with today, and I'm hoping that is soon, hopefully next week. Now, we are at their mercy, so don't hold me to that. I know you guys have been waiting for this for a while, and we have too. So we will make sure that we announce that as soon as we have a chance. There's the opening bell. But before we get started, I wanted to go over a little topic, kind of a little tip or trick on the platform. So let's take a look at the Thinkorswim platform. And one thing that before we go over the market and what's going on, I want to look at what's called the expected move or the market maker move. Okay. So I've gone over this in my courses when we're putting on trades and so forth, and I think most of you listening probably understand that this little section over here shows the monthly implied volatility for that specific cycle. Okay, so that's not the IV rank, it's not the IV percentile, it's the actual monthly implied volatility of that particular underlying. So in this case, we're looking at GDX just as an example. And then just to the right of that is the expected move. Okay, so this is kind of the one standard deviation move. This means this is the little under 70% of the time between now and when this option expires, the price is going to stay in that range. So plus or minus 65 cents in this case for GDX. Okay, obviously as you go out in time, you can see that increases because there's a wider range that price will move around to in a longer time frame. So if you look 25 days out, it's got about $1.60 expected move plus or minus. 60 days out, you've got about $2.44 expected move plus or minus from where price is right now. So that's the expected move. That's that one standard deviation move. The other thing that I wanted to point out that I really haven't talked about is the market maker move, and that's depicted up here. It'll say MMM, and the market maker move is basically the one-day move in that stock. Okay, and so with these, you can see these have different expiration cycles. This is 4 days, 11, 18, 25, and that's the expected move over those different time frames. But if you wanted to find out, okay, what's the expected move of this underlying just today? And that's what you're going to find with the market maker move. So in GDX, it's got a plus or minus 29 cent move from the current price. So it's currently trading at 23.10. So it could trade up to, let's say, 23.40 and down to 22.80. Okay, so that's kind of the expected move, and that gives you an idea of the potential range of that. And these numbers are very accurate over time. I mean, you're going to find outlier situations where price makes huge moves outside that expected move, and that's going to happen, but 70% of the time it's going to stay within that expected move, and so it gives you an idea of the volatility of the range of any particular symbol. Okay, so that GDX was just the example I used, but you can look at that on any symbol. If you look at SPY, some of these big ETFs don't have the market maker move, but TLT, for example, is about 40 cents is the expected move for today. UNG, which is the nat gas ETF, about 23 cents. So you can do that on ETFs, you can do that on stocks, and that'll help give you an idea of that expected move. All right, so let's take a look and see what is going on in the markets. So stocks are up a little bit. S&P's up about 5.5 points. NASDAQ up about 20. The Russell is up about 0.25%. TLT bonds up slightly, down. The bond futures are flat. Note futures are flat. TLT's down about 0.25%. The VIX is down a couple percent, which makes sense since stocks are up. Oil's up about another 0.5%. It's been on a nice run to the upside. Gold's up about 0.25%. Silver up over 1.25%. Natural gas up over 1.25%. All the grains are up a little bit. Wheat being the strongest, up over 1%. EWW up almost 1%. FXI up a little bit. FXE, the euro, continues to be strong, up over 0.25%. EEM up a little bit. EWZ, which is one that had a huge move with the president of Brazil getting himself in some trouble over there. Had that big move last week. I think it was Thursday. Then it jumped back up, and now it's down a couple percent here today. Let's look at the big stocks here. Nothing, no real huge movers. Everything up kind of plus or minus percent. Qualcomm's up almost 2%, and so nothing really major to point out there. So let's go to our trade of the week. So looking to put on some more positions with high implied volatility after the spike we had last week. Volatility has kind of subsided. It's contracted quite a bit, gone down. And so one of the underlyings that I was looking at this morning that, a couple different ones, but let's take a look at the first one, and that was XRT. So we've had some good trades with the alerts in XRT. Where is XRT? Oh, let's just type it in. So if we take a look at the charts, so this is, and don't mind these little shadows. I was doing a video to point out some things here, but XRT has popped back up over 50, so the IV percentile is 52. I was actually looking to get a position on last week when the IV percentile was higher. The problem is that the options had less than 30 days to expiration, and I don't like to go under 30 when I'm initiating a new position. It could have been fine. You know, I could have put it on with 28 or 29 days, and that's not a big deal. But if you look, there was no July expiration options last week. So today is the first day of trading for the July options, and we've got 60 days. So I was waiting for that longer time frame. I wanted to start putting positions on in that 60 days to expiration time frame. And so now we have that with the July options. So I'm going to go ahead and open these up and take a look. And so what I'd like to do is I'd like to put in well, and these are kind of wide. So there's actually no open interest yet. So I didn't, before the market's open, you couldn't see that. So I was assuming there was going to be some volume in there, but there's not yet. So I'm going to hold off on XRT. The other symbol, though, that I had as a backup that we'll take a look at is Microsoft. Okay, so let's take a look at the chart of Microsoft. And the IV percentile, IV rank has dipped down a little bit below 50, but it's kind of the highest thing on the board. The other thing about Microsoft is they just had their earnings announcement a couple weeks ago, their dividend last week, so we don't have anything to worry about as far as earnings or dividends with our short premium. So I'm going to put on a position in Microsoft. Now, you can look at potentially selling a strangle. You could look at potentially doing an iron condor. The problem with an iron condor on a stock priced as low as Microsoft is that with transaction costs, you just don't necessarily get the best bang for the buck, okay? So when you start getting into stocks that are over $100, $120, $150, $200, a lot of times I'll spread those off in an iron condor because you can still get some good premium relative to you can still collect some good credit relative to the risk and to the transaction costs. But with a stock, under $100, I'm typically going to do a naked position. I'm typically going to do a straddle or a strangle. So in this case, let's take a look at a strangle. So again, I'm going to go 60 days out, and we'll take a look here. So we've got a 17 delta, so I'll use that as my short put. So we'll sell strangle. Then we go to the call side, we've got an 18, so that works on the call side, so that'd be the 72.5 strike. So let's change that to 72.5. And then let's analyze that. So we're getting over $1 credit, which is great. So got over $1 credit. So yeah, let's set our slices to break even. I know it goes off the screen here, but I'm setting it to the expiration date, which is 7/22. Make sure your calendar up here is 7/22. So we've got over a 78% probability when we initiate this trade. And the way that we manage trades, like we teach in our courses at a percentage of max profit, we're really going to have closer to a 90+% chance of taking this off as a winner. So I'm going to go ahead and get this filled and shoot this out to our alert subscribers. If you haven't tried the alert subscription and you want to try it out for a couple weeks for $7, we have that special going on. So go check that out. Otherwise, have a great week of trading, and we will talk to you soon.